Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Wednesday evening, August 23rd, 2006. I've got the Nasdaq 100 up on the screen right now, looking at the QQQQ. And just to reiterate where we are in the market, where I think we're going to go here the next couple days, looks like just a normal, healthy pullback so far. And this market is, I think, pausing before it rebuilds momentum to drive higher again, basically. The 50-day moving average is flattened out. We're about to get that 20 to cross up through the 50. And then if we take out this 39.20 level, looks like we're headed for a test of the 200-day moving average up near about 40.5. Looking at the 10-minute time frame, we are in a little bit of short-term not necessarily danger, but I think we need to be a little bit on the defensive because we did start to see a pattern of lower highs and lower lows today. We've seen these lower highs, but then today we've seen a definitive break of these lows in here. So we need, in order for me to kind of get back to a little bit more bullish stance, we need to see the market get back above 38.30 or so and stick there. The market did try to recover a little bit end of the day, so that was good to see. And as I pointed out earlier, we retraced at exactly 38.2% of the recent leg higher. Let's go ahead and just take a look at some stocks. I don't have a lot that I'm looking at here that I think are good low-risk candidates, so it's going to be a short video here today. First, we'll look, though, at Broadwing, symbol BWNG, Nancy George. You can see Broadwing broke past this level of resistance that had been holding it back through June and July, and it did so with a little bit of volume in here. We can see the last couple moves, drives higher, have come with volume, and then the volume relative to that has been declining. So nice low volume pullbacks after a big volume event. That's the relationship we're looking for. So I think that Broadwing on the upside could get going up towards about 12.5 would make a nice target. So about $1.50 away. Now looking at the 10-minute time frame, we can see here that, let's go with the 5-minute. We've still got this 5-day moving average that's declining. So I think that we've got some resistance at 11.20. I'd like to see the stock get up above that 11.20 level. And then after that, we're going to put our stop at 10.98. And we're looking for a move up towards about 12.5. So 10.98 is where our stop would go once we get involved above 11.20. Next up, we've got NGAS, and this is NGAS Resources on the daily time frame. You can see the stock has been consolidating nicely in here, kind of building this little triangle, I guess you could call it, and coiling up in here. It's holding up near the high end of this range, above the upper half, and I think that indicates that there are some buyers still in there. We've had heavier volume as it's rising up in that channel, and on the weekly time frame, we can see that, or maybe we can't see, depending on whether this chart wants to pull up, that I think our target is probably going to be about 10.5 on the upside, 10 to 10.5. Let's not get too carried away on an upside target. But what I'd like to see in here is we've got the 5-day moving average now looks like it might be acting as support. So I'd like to see the stock get back above this high here at 9.05. So once the stock trades above 9.05, I think you can set your stop at 888. So risking about 17 cents. We'll look for a move up towards about 10.5. And next we will look at Novellus, symbol NVLS. Nancy, Victor, Larry, Sam. Here we see on a daily time frame. What is wrong with these charts? There we go. On the daily time frame, you can see that it's broken past some significant resistance over the last few months, and it did so on volume. It's pulled back right to that rising 10-day moving average. Let's take a look at the weekly time frame just to put in a little bit better perspective. I think you could see the stock trading north of $28 a share from here, maybe 28.5 or so. And the way I'd like to see this stock trade tomorrow would be not necessarily to buy this one on the strength again. We'll instead look for a pullback in here. And what I'd like to see happen would be a pullback down to $26.45. Okay, so down towards this level. Once it pulls back towards that $26.45 level, we then want to buy the stock on strength above $26.60. Okay, so if it trades down to $26.45, buy it on strength on the way back up at $26.65, and then you can put your stop, I think, if you wanted to be aggressive underneath this 26.40, or you want to give it a little more room, about 26 and a quarter or so. And on the upside, I think again we could see this stock probably trading at least up to these old, to tie these highs that have been seen here recently at about $27.60. I think probably even a little bit higher, up towards about $28 a share. That's how I'd like to see Novellus trade tomorrow. Next up on the short side, we've got two stocks to look at. First one is JCOM, is the symbol JCOM. Stock is called J2 Global Communications. It's right up above this downtrend line. It's had this little rally that's occurred on diminishing volume, so the buyers don't have that much conviction. It's rallied up also to this prior level of support in here. That's resistance, that looks like it's acting as resistance now. This support also looks like the neckline of a Head and Shoulders top, so that Head and Shoulders top would measure out to $32. Let's just be real conservative and call this 26, even though it's lower than that. We could call that a 6-point move from this breakdown point here, and we'll call it 26 again to be conservative. It's actually more than that. A target, $20 or lower. And looking at a weekly time frame, you can see that this longer-term uptrend line that's been intact for about 3 years, breaking that could be what really gets the stock going. I think that you could see probably that $20 level. This might even be a better candidate for puts. I haven't looked at the puts yet, so I'm not going to make any recommendations there as far as which ones I think are the appropriate ones. This one looks like a simple entry below this level here. Let's just say below 24.08, we want to sell the stock short. We can put our stop up about 24.45. So risking, what would that be? 45 and below 20, so 38 cents, I guess. Risk of about 38 cents on JCOM, and I think you've got a real good downside opportunity here. First target, though, what we'll call our official target, will be a tie of these lows down near 22.75. Let's call it 23. So it looks like about $1 of profit near term for about, what did I say, 35 cents of risk. Next up, we've got, and again, that looks like a better longer-term play, really. Under Armour, UARM. Under Armour, here the stock has clearly broken down. It broke this uptrend line. This is where the double top was completed right here at this point, and it met its first objective by dropping down to here. Now it's retraced up to this level, and it looks like it's ready to begin another decline lower. So here's what we've got. We've got this declining 5-day moving average looking like it might act as some resistance in here. So what we can do is we can sell it short right around these levels, which is kind of an unusual entry for the way I like to do it, but we could sell it short. And let's just go down to a 1-minute time frame. Let's do this. Let's sell it short below 34.80. We'll put our stop up above this high here at 38. We'll call it 35.08 is where we'll put the stop. So we're looking at about 28 cents of risk. And zooming back out to the 10-minute time frame, I think you could see it down towards $33 a share near term. Longer term, I think the stock probably has bigger troubles. And here's another one with this longer term uptrend line that's still intact. My name again is Brian Shannon. If you're seeing this anywhere else other than my blog, be sure to visit my blog because you're going to see it there typically a couple hours earlier than you would anywhere else besides my blog or marketwise.com. Thanks for your time.